All right, so welcome to Wallstreet Jackboyz Game Plan Sunday. Today is July 28th. We're actually going to take a look at the markets here, take a look at what occurred over the past week and what events we have coming down the pipeline. See if we can strategize and get some game plan sessions, and make some money here. It's a pretty eventful week last week. There are lots of reports that came out from the ECB, from the head of the Feds over in Europe, Mario Draghi. Where they're actually looking forward to moving, towards more stimulus to the economy over there in Europe. Europe is in a dangerous situation because their economy could actually pull down our economy. So they're trying to go ahead and put in stops in there now and trying to go ahead and get that out the way. As you already know, Draghi's on his way out the door. Christine Lagarde, who's the head of the IMF, she's going to be taking over the ECB. So again, we still want to keep our eyes and ears in tune with what's happening over in Europe as that information, as those situations bleed over into our economy as well. And then we also had GDP numbers that came out, which are at 2.1%, which was actually better than what was forecasted. Everybody was expecting somewhere between like 1.6 to 1.9 slowdown in the second quarter. It is a slowdown. It went from, over 3% down to 2%. So we are seeing a slowdown, but it did beat expectations. And so we saw the markets rallying. We had, new highs here in the markets over the past week. On Friday, we hit new highs. So the stock market is actually, still juiced up. And again, we understand our place in this cycle here. We are at the end of this bull cycle. The question is, how long can it go? How long can it go? We don't know how long it's going to go, but we do see signs in there that, there's slowing down right now. It's a possible recession, a pending recession, if you will. But for the time being, there's still money to be made, right now. So we're going to play the setups that the markets give us. And then on the downside, when those opportunities do come, when the market does go down, we're also going to continue to make money. And because we play options, and so we're going to make money as this thing go down. Every direction is always going to be some time to make some money. So at least we know where we are in this cycle. So again, you guys who are members, you already know what time it is. What's good, Topaz? Good to see you. What's good, Sandra? What's good, Mia, Aaron? I got to see you guys. And make sure y'all hit that share button as we go in and get some value out here in these streets. All right. So taking a look here at the charts. Let's go into a daily chart real quick. And if you guys can't see the full screen, I do encourage you to join the chat room so you get the full experience, which the link is at the top here, where you get to see the full screens, because I do understand the camera's kind of in the way. So I try to adjust things so you guys can see it on the Facebook side as well. But this is where we are with the markets right now. This is the S&P 500. As you guys can see, we did hit that new high right there. 3,029. It's on the futures. And I'm going to go on an intraday chart here. And so we do have this key level of resistance here that's running all the way across here. So we see that this thing has issues with clearing this level. We go back in time. Every time it comes hit this level, it doesn't clear it. Well, it hasn't cleared it yet. Friday, we did have a nice pop up right there. And it's coming back down now. And so what we want to pay attention to is see if this is going to clear these levels. Okay. So we need for the candlesticks. Let me just shrink that down a tad bit. All right, so we need to see if that's going to clear to come to the next upside target. Now, if there's any sign of weakness, then there's going to be a rejection that's going to come down. All right, it'll come down to like the mean first. That's the first part. And so I am bullish on the markets, on the S&P 500. So again, what's coming down the pipeline this week, Wednesday? We already know the Feds. They're having a meeting. It's going to be highly anticipated. We're talking about a Super Bowl event in the markets. What are the Feds going to do? What are the markets waiting for? The markets is waiting for the Feds to cut interest rates. So interesting situation is that it's already priced into the markets that the Feds are going to cut the interest rates. Now, is there any particular reason why they need to cut interest rates? It's a whole different debate. But when the Feds start this process of cutting interest rates, it normally ends up in a recession. Okay. Let me actually see if I can actually pull up a chart for you guys to even see what I'm talking about. Let's see. Rate. So we want to keep our eyes on this information again, because we're trying to see what's happening with the markets. For those that don't know, I'm going to pull this chart up for you guys. You can go to this website and check it out. This is the Fed's effective federal fund rate. Okay. We talked about this several times in the past. You guys already know what time it is. Okay. So when you're looking at this, what does all of this mean? Okay. Well, all of this means, we'll pull out the red on. All right. So anytime you see the shaded parts, y'all know that those mean recessions. So when you're looking at charts, you see shaded lines. Those are telling you that there's recessions. Recessions. Okay. As we go back in time, we see those recessions. What else do we see? All right. So what we see is interest rates rise up. Interest rates rise up, recession, right? Interest rates rise up, recession. Interest rates rise up, recession, rise up. You guys kind of get the patterns, right? Skip that one part because it didn't go there, but every other time it did. And so they raise the interest rates until they break the economy. This is where we are today. They rose the interest rates 2.5, right? They had a target of 3%, which they was trying to get to, which is right around here. They never got there because the economy is starting to show weakness, signs of weaknesses. And so again, we had those reports that just came out last week, all right, GDP numbers showing signs of slowness. There's projections of even more slowness to come. And so you just got to keep an eye on that. Now, this is what this is all about. Okay, Feds raising interest rates and cutting interest rates. When they do that, they stimulate the economy or they stifle the economy and they can choke it off. And this influences you to spend money. You don't realize it because you're just a user in the system. You're a user of the matrix. The matrix itself it's a controlled world, but it's not like you're forced control. It's mind control. It's influencing. And so what the Feds do, they manipulate this interest rate. This is their magic wand. And when they maneuver this makes the banks react in a certain way where they are, being able to add money to the economy, which is credit. So they add credit to the economy. More credit that's added in the economy, people got more money. When people got more money, they spend. Okay? Just think about all the federal holidays that you have. Those federal holidays are created so that consumers will spend money. That's all it is, okay? It don't have nothing to do with religion and none of that stuff. Is really so that you can spend money, okay? Because the economy, you got to remember 70% of the economy is based off of you spending, okay? So they don't want to see this slow down. The expansion comes when you are spending money. So this explains to you guys who have no idea. And again, I have some critics out there because I do like to debate. But if you take a look here in time, if you pay attention to when Feds cut the interest rates, right? It's normally after the recessions, right? Let me get a different color here so you guys can see this. Let's go with black. All right. So normally they don't choke it off. I mean, they keep it low. They keep interest rates low for maybe about two to 4 years, but on average, somewhere around like 2 years. So just pay attention. 2 years. That's what they do. Normally about 2 years. Can anybody explain why they kept interest rates this low? Okay. And these are the Obama years. I know everybody says, oh, it's Obama's economy. Okay. If that makes you feel good. The reality is that the Feds are the one that's in control. So that's why the markets is going to be paying attention to the Feds this week on Wednesday. They're not paying attention to Trump. They're not paying attention to no president. They're paying attention to the Feds because the Feds control the money. To understand, when you're talking about the expansion, the bull market that it is, every time I showed you here in the past, all these black lines, they normally only keep it low, okay, for about 2 years. But we're talking about a whole 8 years, the longest time in history. All right, the longest, and we're in the longest bull market in history, right? We're in our 11th year, but it's longer than it should be. This cannot last forever. It is unsustainable, as I showed you. Every time in the past, the recessions happen because of the credit cycles. It's a cycle, okay? So when I say that there's a recession coming, it's not just for poops and giggles. It's not just because I feel like it, because I'm some kind of doom duster. It's because of the data, the evidence that I'm showing you guys right here. This is what the markets are going to be looking for this week. They're going to be looking for the Feds to cut the rates. So when the Feds cut the rates, this encourages spending. So when people spend, I'm going to put an S here to let you know that that's what they need for you to spend money. All right. They cut it and then you spend money. When people spend money, they make asset prices go up. Think about the houses, 10 years ago, 20 years ago. Look at the prices of these houses today. This is how a lot of people accumulated their wealth. Okay. After the recession, right? After the recession, Feds do what they do. They start cutting rates. Or they start cutting before because they know it's coming. And either way, it's coming. But when they cut that, that encourages spending because now you got the lowest interest rates. All right. It's the best time for you to go and get a house. It's the best time for you to go get a car, right? Because the interest rates is lower. That means it's less money that you got to spend to the banks. So it's to influence you to go spend your money. That's how the economy works. Okay. So under these years here, the Fed's mighty hand was at work. They kept interest rates to zero. So you can basically borrow money for zero. Okay. That was the best time for you to be borrowing money, right? Debt. That's a cheap debt. Okay. Now, normally when the Feds cut the rates, okay, they normally need about 5%, 5 points to help stimulate the economy. That means the economy is hurting. They need the Feds to give them a handicap of 5 points on average. All right. So 5 points is what they really need. And as you see every time in history that we have on this charts here is that the interest rates have always been above 0%. Okay. But on this last cycle, you got to remember, on this last cycle, the recession was really, really bad. It was so bad that they kept the interest rates at 0% for all of Obama's years. And their goal, again, you got to remember, they cut the rates so that the economy can go up. So the stock market, everything goes up when they cut rates. Okay. And so to stop it from overheating, they had to raise the interest rates, raise it up. Okay. Because inflation becomes a problem. Everything is overvalued. Everything is overpriced. Your houses, now people can't afford houses. People can't afford all of these different things that you normally would because the bidders, you guys are spending your money. You're making all the prices go up too high. You're spending too much money. Your spending controls how the economy goes. So you are a participant in a major, you just don't understand your position here. So I'm just educating you on it real quick so you know how to move forward. And this does, again, we always tie it back into the market so we can make some money or whatever. But this is what you need to understand. This is why all this is important because coming up this week, this is what everybody in the markets is going to be looking for. The markets is looking for a stimulus. Now you say, with the stock market as high as it is, okay, just showed you guys. Let me actually just take this off. Let's actually just slide this over real quick just so you can see. Okay. Look at the markets. The stock market is at an all-time high. Okay. Stock market is an all-time high. So most of you guys think that the stock market is the economy, but it's not. It's one piece of the economy. It normally follows the cycles of the economy, but it's not the economy. There's other things underlying that we talk about. And so the stock market, this is one place. There's a lot of money, a lot of wealth concentrated here. The stock market is an all-time high. does the stock market, you looking at these charts, does it look like this needs help? Does it look like the stock market needs help? Does it look like the economy needs help? We're hitting new highs. Your 401ks are booming right now. I'm over 20% return on my freaking 401k, over 20, like 22%. Crazy, right? So the market is moving over 20%. Your 401ks should be booming right now. That's good. So why is it that the markets need help? Because again, when the Feds cut rates, that helps stimulate the economy. It helps stimulate the markets, right? So again, that brings us back to this point. Showing you guys on this chart. Okay. So as you can see this, I guess they got a smaller chart here. But as you see, as we just discussed, move all of that out. The Feds are getting ready to come in and do what they do. When they come in and do what they do, when they cut rates, you got to remember, they cut rates at the recession. Make that money cheap. Make it cheap so they can borrow that money so we can put that money in the system. Boom, zero, okay? They normally need 5 points to stimulate the economy. So you need enough interest rates. You need 5 points. We don't have 5 points to give. We barely made it to 2.5. This is where we are. We barely made it to 2.5, and they're already getting ready to cut these rates. So no jobs will need help soon. And how? That's right, Topaz. You already know it's coming. So I'm just letting you guys know this is what's coming. This is all data. This is no opinion. This is data. It has to happen because it's the way the cycles work. Because you borrow money. Credit is the reason why you have cycles. Okay? So anyhow, as you see that it paused, that was a stimulus for the stock market because they didn't continue to go up. As they went up, the market started selling off. Okay? You remember the sale that we had back in December? That was dramatic. All right? They wasn't having it. They were like, yo, you stop this right now. Okay? We need cheap money, right? You hear Trump in the news always talking about, oh, Obama had cheap money. If y'all gave me 0%, I had this economy smoking, right? And yeah, you would, but smoking the economy, you'll still crash it because, again, you'll cause too much inflation. So you got to let the Feds do what they do. They're supposed to keep balance, all right? That's what they're supposed to do, but they always get it wrong. Nobody ever predicts, none of those economist guys ever predict a recession. So, but if you look at these charts, you can see it coming. All right. Every time in the past, you can see it. It's just like, yo, that's crazy. All right. But this time they're getting ready to cut this week and they don't have 5 points to help stimulate this economy. And across the world, especially in Europe, we're looking at negative interest rates. They're going below zero. And so the Feds have been talking about doing, again, this is more manipulation, some unorthodox techniques to try to keep the bubble going. That's not supposed to be the Fed's job, is to keep a bubble going. I don't know why they're bent on keeping the expansion, as they call it expansion, but it's still a bubble, right? Keep the expansion going. Why? Because it's going to hurt even worse when it actually comes. So I think, again, the notion is to try to keep the economy going for 2020 so that Trump can win the election so he can brag about the economy, get him in there for another 4 years, and then you get the crash that comes afterwards, whatever. That's the game plan. It has to happen. And so the sooner that it comes, the better everybody will be off. But if they let this thing continue to inflate, people are going to get in more trouble because what they do is they cut the interest rates just like this. They cut interest rates, right? When they cut those interest rates, then you got the banks, you got everybody trying to be in your inbox, sending you massive amounts of mail, telling you, come buy this house, come buy this car. Interest rates, the lowest it's ever been. Boom, 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 boom. Now you're being influenced. You don't even understand what's happening to you psychologically. It's a game. This is why I call it the Matrix. So they're getting ready to do that again, starting next week. When you see when they start, they don't stop. When they start cutting, that's what it is. You know what I'm saying? When they start cutting rates, it ain't no going back up. It ain't no raising the rates back up. When they cut, they cut. All right. So when they cut starting next week, and they've been raising rates since Trump been in office. It's three years. When they're getting ready to start to cut this week, then this is going to continue. This is going to go down, and it's going to cause more inflation. So you talk about the houses being too expensive. You look at the housing reports. People can't afford housing. If you guys saw the 6 month report, the 6 month blog that we did, if you're not a subscriber, make sure you subscribe so that you guys can get that. I get you the charts. If you are a subscriber and you did not get the charts, make sure you let us know so that I can get that in your inbox. But with the 6-month report based off the economy, we go over that stuff. We go over how the housing market is doing, the auto market. We got cars sitting on lots that's just rotting away. You got houses sitting around. You got excess inventory. You got houses, just sitting out there that's not being sold. New homes are not, being built enough. These are signs underlined. They don't have. It's not the stock market, but it's the real economy. Most people can't afford houses, so you got more people that's renting. And it's getting crazy. It's getting to the point where people are renting houses. I saw in California, like $1,200. Not even renting a house. They're renting bunk beds in houses. It's crazy, right? These people can't afford this stuff. The price is too high. So when they get ready to cut rates, that means this is going to be stimulus. This is going to put more money back into the economy. When people got more money, what do? They start playing the game. They start playing the matrix, and they don't understand their role and their own demise. They start spending money, and it's all by design because they need for you to spend money. If you look at the Fed site, they say they want to keep the expansion going. We're going to do everything in our power to do to keep the expansion going. And Wall Street is like, yay, right? So that's what we're looking for, because they do that. The markets are supposed to go up. Asset prices inflate. So one of the assets is stocks that goes up, right? So that's a lot of wealth been built in the stock market. And so that's the stock market is going. But there are many that believe that this is going to backfire, okay? Because it's not going to cause a stimulation. The Feds have this inflation target. This is the reason, okay? The Fed got this inflation target of 2%, and they cannot get to 2%, okay? They try to stimulate the economy, say stimulate it, get it down, and let's get it pushed up to 2%, right? This is interest rates I'm showing you, but I'm just showing you every time they cut, that's supposed to help the interest rates go up, but they have not been able to hit their 2% target. And so they're getting ready to run another stimulus to see if they can hit that 2% inflation. Meaning they need for you to spend more money. They need for you to inflate more. But people are spending debt. People are spending credit. They're not spending real money, real cash flow they have. So they get in trouble. And so when they get in trouble, they can't service their debt. So getting in trouble means that they can't service their debt, right? And it's beyond that. It could be they lose a job because jobs are laying off now. And there's other things that we've seen in the economy that we just showed you guys, like the manufacturing supply numbers, how they're dwindling, they're shrinking. So if manufacturers, companies are not ordering as many supplies as they do, that means that they're not selling as much of the inventory as they should be. So it's a slowdown there. They're not ordering as much. When they slow down, guess what happens to you in your nice little secure job? You get laid off. You get fired, you get laid off, or what have you. And then once that happens, the panic starts, and that's what causes the recession. So anyhow, that will be starting this week. So that's what we're looking for in the markets. How all that's going to play out. So enough of that. Let's get to how do we make some money here. All right, so we'll drop that chart. All right, so here we go. The ES is trading right now. The weekly chart. Let's go here. So what we want to pay attention to, because we're seeing the major indexes are all in squeezes over here. And so they're going to explode. They're going to make a move. They got to make a move because they're in a squeeze here. We're looking at the S&P 500. We're looking at, let me give you guys the arrow here. Okay, we got squeezes here on the S&P 500, also on the NASDAQ, also on the Russell. We also got bonds in the squeeze too. And this is actually getting really interesting here. Okay. So everything, all the major indices are, in squeezes. So they got to make a move. We don't know which direction, but they're going to make a move. And now the Feds, again, it's priced in the markets that they're going to cut rates this week. We're talking very like 80% probability of what have you. So there is something that they're supposed to do. If they don't, then you'll see the market sell off. All right. Because the markets, Wall Street ain't having it. Wall Street's like, yo, bring the stimulus on, Feds. So if they don't, and they shouldn't, okay, they shouldn't. They need to actually raise interest rates. But there's pressure across the world. All these other countries, this is what they're doing. Europe and all these other countries, that's what they're doing. So you guys, you may hear Trump talking about it. He needed the Feds to cut rates here because the other countries, they're cutting rates too, right? And so, but it's they should be raising the interest rates right now, to be honest. But they're not. They held off since December, and that's what caused the markets. If you guys can see, that's what actually caused the markets to do what it's been doing. And so It's been going up crazy. So them not doing anything is a stimulus, and them cutting should be a stimulus. And so I'm actually more inclined to looking for some long setups. I'm looking more towards, you know, again, this is our resistance level, but I think we can make it to the next zones up higher. And so because of that, some of the setups that I'm looking at, again, if we look at our handy dandy Wall Street Jackboyz squeeze scanner here, you can quickly pull some things right off the list. We can start right here at the top with John Deere. This is a setup right now. Pull up the charts for you guys. Okay, interesting. My man Ron at, this is actually starting to look like a cup and handle here, huh? Your pattern play. But we do have a squeeze here, so this is why this caught our attention, because it's right here on the sideline. You saw it over here. All right. So what are we seeing here? Well, we see that John Deere has a squeeze set up here. We do have some upwards momentum, upward trend here. Momentum is a little up there. So it's a little extended. However, it's in a squeeze. Because it's in a squeeze, the squeeze got to pop. We just hit new highs on Friday. We had a buy trigger here. Hit those new highs on Friday. All the way up to the Fibonacci extension, 170. We got another extension here at 173.95. And so that'd be a nice little target there. But there's a bigger target up ahead at about $180. So about 10-point move is what I'm looking at there. That's right. You see that topaz? It's a cup and handle. Yes, and a cup and handle setup. Again, you guys, got the books. Okay, you're a member. You're not a member. Make sure you become a member. You get the books. Give you all the setups. All of that is in here in this nice book. All these patterns. These are your cheat sheets. So again, you'll be able to follow through the way that I follow through. So it's not that I know it all. Okay, I don't want nobody to think I'm some kind of guru. I don't think I'm a guru. So please don't call me a guru. Put me under too much pressure here. All right. So anyhow, I like John Deere because of the cup and handle setup. I like because the bullish squeeze is in there as well. And that's it that I see there. And that's coming out of the industrials. Let's see. So it's coming out of the industrial sector, and that sector is actually looking pretty good. So it's looking pretty decent. What else? What I like to take a look at? Let's see. Well, we do have on the list, the interesting one. You guys can see, again, we're just pulling straight from our watch list. This is the Wall Street Jackboyz scanner. All members got this scanner. If you don't, let us know so we make sure we get that to you. What's good, Shatira? What's good? I see you. All right, so TTWO for those video gamers that's out there. This is the company that's behind Fortnite. So if you have your kids bugging you about V-Bucks, Z-Bucks, whatever they call it, buying V-Bucks, because again, that's what the kids do, playing Fortnite, and they need real money, your real money, to go and spend fake money in this company here, which this company owns Fortnite. You can actually get that money back in the markets. Okay. Have your kids come learn this, and so they can make that money back, or you can learn it yourself. Take that profit and you can, splurge on your kids if you need to. But anyhow, the thing that's interesting about this chart is that it is bullish. Okay. It did cross over back here. And one of the reasons for the sell-off back here is because there was a video game that dropped by EA Games. It was Apex Legends. And so it was like the game sold more than Fortnite. And so that competition drove the prices down. And then that same game decided to release an update or upgrade, a season 2, whatever they call it. And it didn't do as well. And then you start to see Fortnite come back. So Fortnite gets back on its throne. And so, again, this is looking really bullish. They do have earnings coming up ahead. Let's see when the earnings are. Oh, let me take that out. Okay, there we go. Earnings coming up on the 5th. Okay, so August 5th is when the earnings are coming up. And on my immediate Fibonacci targets, we have reached these limits here. But because it's in the squeeze normally makes things blast off. Okay, we normally see a blast off after the squeeze. So we're in the squeeze here, and the squeeze is going to do what it's got to do. It's going to make a blast off. When it normally makes this blast off, I'm probably looking at about the 78.6 retracement there. So about 130, close to 130 to the long side. So I do like that to the long side. The video gamers that's out there. And crazy, man. I tell you, man, I had actually downloaded the Fortnite on my computer because my son, he liked playing the Fortnite, my son and my daughter. So like, yeah, I got to play with them. I'd be in the office playing, you know. And I go download it, and there's a company, smaller company, Epic Games. They make Fortnite, and Take-Two Interactive. This company owns them. But anyhow, I go to download the game on your computer because the game is free. You just got to pay V-Bucks, and that's how they make their money, right? So they're changing the whole video game atmosphere. I go download it, and I remember Epic Games, so I'll say Epic. That's the first thing. I'm just, moving real fast, not paying attention. I go hit the Epic. Go download. I go to this website. It looked official, but it was Epic Play. It wasn't Epic Games. So be careful when the Epic Play. And I want to go download. I end up downloading a virus on the computer. Crazy. So if you decide to play Fortnite with your kids, make sure you don't download it from Epic Play. Make sure it's from Epic Games. Anyhow, so I do like this company here to the long side. What else we got? Topaz, you here? Let's take a look at ADP. Next on the list. Okay. Next on the list. What's down the pipeline? What's in the pipeline for ADP? Topaz, you got the scoop? No, Topaz got the scoop. All right. Again, this is right on our handy dandy list. Just going down the list. Okay. ADP. We got a squeeze set up right here. The trend is up, so that's participating with us. We did get a buy trigger back here. We are trading above our moving averages. This stock is clearly bullish. Okay, we do have major resistance up ahead at the 173.59. So we'd like to actually get in and get out there for profit taking. We do have 177. That's close to 180 for the second target up ahead. Up ahead there. And so now we do have earnings coming up ahead, so we got to pay attention. These will be trades that you get in and get out of before earnings report. Ain't no telling how that's going to go. Okay, earnings is on 31st, so that's in a couple of days. It's going to be like 3 days from now, what have you. Okay. So I do like this one to the long side. And now banks. Y'all know I'm not playing with banks right now. Like, I'm just not good with banks. But I do like Bank of America. That was something interesting about Warren Buffett. Great old Uncle Warren Buffett, with his positions over here in Bank of America. I don't think that this is going to clear this resistance level, but we'll see. Now people start to react. They're like, oh, Warren Buffett said this. They start to buy it up. But really, Warren Buffett bought this stuff a long time ago. The move has already done what the move needs to do. But that's something that's interesting to look at because the banks, they're going to have some kind of reaction based off of the Fed news. And so if I am looking at any banks, probably be like Bank of America or Citi. But I don't really like that. Let's see. What else? Okay. Take a look at Disney. Now, Disney's been really interesting. And so Disney is heavily weighted in the communication sector. For those that don't know, XLC. This is the XLC right here. So this is why I like this setup, this trade here. We make it a little bigger for you guys. So this is XLC. This is the communication sector. Got a nice little handy dandy cup and handles pattern right there. What's good, DJ Magic? What's good, Lucretia? How you doing? What's happening? All right. So Topaz, you already know what setup this is. My man Ron, he's the cup and handles master. So that's what you got, that cup and handle right there. That's a bullish play, okay? That's the trigger there. All right, so look for the sector itself to go up, but sectors themselves, they move a little steady. So if you're a little steady, you don't want to put on too much risk, play those sectors. But if you're looking for some big moves, some good moves, then you want to go get into the basket itself. And one of the stocks that's heavily weighted in here will be Disney. That's in the communication sector. And it is trading above its moving averages. We do have earnings coming up ahead, August 6th. Okay, that's about a week from now. We do have upwards, we have resistance up ahead. We do have some resistance up ahead. Don't know if we're going to clear this. But on any pullback, I would like to get into that to the long side if we can get in there before earnings, if we can participate before earnings. So we'll see if it comes down to about here. All right, so about 143. It's about $1 move. That'd be a good place to pick up. And I look forward to go to the north side. Y'all know who Disney, the movies that Disney make. Lion King. If you haven't seen the Lion King, we just saw the Lion King when it came out, and I think it was a pretty good movie. I know there's mixed reviews. Lucretia said you got a January call on it, so she's already planning to the north side. As you see, you know what's coming down the pipeline. Disney's big boy. Lucretia, I'm not too sure, but I remember Disney's supposed to be launching their channel, supposed to be competing with Netflix, where they're supposed to be taking all their stuff off of Netflix and making their own Disney channel for the kids and stuff. So that's going to be big for Disney down the pipeline. I don't know if you know that or not, but I think that's coming later this year, around fall season. So that's coming shortly, where they should be breaking free. So that's good news also coming up ahead. So those are some good reasons to be bullish on Disney. And but yeah, so I do like Disney to the long side there. And as Topaz mentioned, there was a merger this past week with was it Sprint and T-Mobile. And so again, as we were just looking at the communication sector, that sector itself, all the stocks in that sector started moving north because of that merger. Let's see. T-Mobile, for those who don't know, just to recap. And that's interesting. I don't know if you remember Topaz, but with T-Mobile, there were talks early this year about the merger between T-Mobile and Sprint. If they was going to approve of it, how it would be interesting because your boy Jeff Bezos, right, Terminator himself in the flesh, supposed to be getting into the cell phone industry because they feel like it needs balance. And so we have this merger, it's gonna bring down all the major carriers down to 3, but it needs to be a big 4. And so there's talks that Amazon may move into the mobile phone space, and that's crazy if that happens. So, but yeah, so you see that big move there. T-Mobile went bullish here because the news on the merging with Sprint, which Sprint is just S. And so those communication stocks moving north. Bullish on that news there. Yeah, I see. Thank you. All right. Okay, so with that being said, anybody got any moves they want to take a look at? Any setups, any plays you guys want to take a look at? Open the floor for you guys real quick. Then we'll bring the session to a close. Make sure you guys hit that share button. Tell a friend to tell a friend to tell a friend. If you want to know how we do, what we do, make sure y'all go check out our website at wallstreetjackboyz.com. I'll drop a link in here as well. wallstreetjackboyz.com. You can get our training so you can learn how to do how the Jackboyz do. Okay? Just go to the website, sign up there. Make sure you sign up for the newsletter. That is totally free. And you guys can get that. Excuse me. All right. So Topaz MasterCard is looking bullish Do I have levels on here? These levels are a little high here for me. It's a little rich for my blood. It's a little extended here. The chart itself is clearly bullish, but let me see if I can get the voodoo lines on here real quick. See if that'll help us out. Oh, my voodoos is gone. I don't have any. So stock is clearly bullish. It's extended though, so it did hit new highs. Okay. Let's see. Earnings on the 30th, so that's in a couple of days from here. You guys can see 2 days on Tuesday. All right. So that's 2 days. I wouldn't want to get into this until earnings, do what it needs to do for earnings. And so, and again, it's bullish. Of course, it's bullish. But do you want to buy these extensions? That's the question. These are the boundaries. Stock itself is trading outside the boundary, so I mean that it's overpriced. It's overbought, I should say. Not necessarily overpriced, because people are still willing to buy inflated assets, overly inflated. But because it's beyond its boundaries, I would not want to get in here at this. I would like to see it pull back before I get into it. So you see it pull back, you get in there. It pull back, you get in here, like at these floors. The non-moving average is a good place. Or you can go to the 20 moving average. Back here, it hit the 50. So that was a good re-up spot. That's the re-up. Say, oh, that's when I get in. That's how you make the money. All right, cool. What else we got? Yes, BX. All right, so Lucretia. Let's take a look at BX real quick. What is BX? Blackstone. Yeah, these are guys managing your monies, huh? You gotta watch them. You gotta watch them, man. They're not the gurus, but they are the money managers, right? So, boom, we got levels. And Lucretia, I don't know if you can see the charts fully because of the screens. If you're in the group, the chat room, you can see the full screens, but I try to adjust my screen so that you guys can see what I'm talking about here. But you get the best experience if you join the chat itself. So I do encourage you guys to come join the chat because I'm not going to be on Facebook forever. All right. So this is Blackstone here. These are our levels. We do see that the first target was breached, and then we got to the second target. That's where you should have been profit taking. We see that the stock itself is behaving to the Fibonacci's and it's coming down some. Okay. Now, again, we're talking short term here. So it doesn't mean that you should sell your positions, but if you want to capture profits, if you're doing options like what we do, then that's the time that we get in and get out. Overall, the stock itself is bullish. I'm not too sure. I know you play stocks too, Lucretia, but yeah, the stock itself is bullish. You can expect like a nice little pullback. Now, if you want to add to the position, okay, you'll traditionally see the stock will pull back to the mean, right, which would be this moving average somewhere around here. And once it solidifies itself, okay, it may even come down to the Fibonacci target. Once it solidifies, start to trade sideways and then starts to make its comeback, that's where you enter and add more to that position. So that's how you want to play that. And again, it's clearly bullish. So for, stock position, it's trading well above its moving averages. But it has hit its overhead resistance for the near term. So this is nothing that I would enter into right now. My man, Ron, what do you have for me? All right, Ron, what you looking to do with PYX, my man? This stock is it the PAY? Oh, is that Paycom? No, Paychecks. PA. Okay. I was like, what in the world are you looking to do with that, man? All right, so y'all know Ron, he's our cup and handles expert here. He's always coming through with them cups and them handles. Those are bullet setups, but I do like this chart here, Ron. All right, cool. So I like this chart here to the upside. All right, the stock itself is trading well above all of its moving averages. Okay, and it's trading above this key level of resistance, which is the 618. All right, doesn't have a squeeze, but it does have the trend participating. And this should actually start to participating as well. I'd like to see it go up to this target. I don't know if it'll do it before the dividends. You got to remember, it's got a dividend payout coming up. So just keep that in mind. Okay. Buy the dip. Thanks. Okay. It's too small. Options January. Okay. Cool. But I do like this one here to the long side. So I think that's a good play as well. All right. Anybody got any questions? Anything else? Take a look at before we end the session. If you have any questions, let us know. You have peers here. If you see everybody that's participating in the chat, those are your peers. And, each one teach one. That's a philosophy that we have here at Wallstreet Jackboyz. If you want to learn, definitely make sure all the members, if you don't have your books, okay, get this in your inbox. These are, again, for all the members, get all the books. And catch up on your Greeks. You gotta learn your Greeks. You gotta do all that. You gotta catch up on your option strategies. Stuff that Topaz don't like. She don't like witch hats. Make sure you get the trading plan. You need a plan. Okay. So all the members, if you don't have this, let me know so we make sure we get that in your inbox. Okay. Those are all the tools that you need to be successful. All right. So with that being said, man, hey, I truly appreciate you guys joining for the session. We'll be back next week. And, make sure you guys, communicate with your colleagues, man. The community for a reason. If you're not in the group on Facebook, make sure you join it. The group is free. But I have this saying, I always tell you guys, new skills require new friends. So when you're learning something new, you need to be in the company of people that's going to help you to grow in that field. Your old friends, they're not going to be able to help you. They're not going to understand what it is that you're doing. A lot of them are going to talk you out of it because they don't understand it themselves. They are scared and they're, afraid of things that they don't understand, which, I can't fault them for that. But you want to surround yourself with other people that are, going, that's in the road that you want to go down, or it's going to help you to add value to your life. And so that's why that's why I started Wallstreet Jackboyz. We have all these great traders that sit here, like you see Lucretia, you see Topaz, you see Ron. Like these guys, everybody, they've been trading before I even started this, but we all come together and we help one another. And that's what the community is all about. So definitely want to encourage you guys to join. The group itself is free. You can see what we do, see the setups, have questions and stuff like that. You got your peers to help out. I am not the only person that's there. I am active, very active. I'm always in the chat all the time. Some of the other gurus, they have services and you can't talk to them directly. Hey, that's where you want to spend your money. That's cool. But definitely join us if it's not for anything but just the fun of it. But you will be learning something. So again, you can't hang with 9 millionaires and don't become the 10th. You hang with 9 millionaires, who's going to be the 10th? I say the same thing. Hang with 9 traders, you'll be a trader too. So with that being said, I'll go ahead and bring this to a close. Y'all enjoy the rest of your weekend. Peace.